Hey guys, Mike here. So another crazy day in the market with all kinds of news coming out from everywhere. You got FOMC meetings, you got just disastrous news coming out of the UK right now, which is what term markets read in the morning. You got the polar opposite earnings calls of Target and Lowe's versus Walmart and Home Depot yesterday, which were better than expected. And today, Target, they're struggling like crazy, missed like crazy. For the rest of the year, it doesn't look too good for them. And then you got Lowe's saying the opposite of what Home Depot said, which was people having less discretionary spending when it comes to home projects versus Home Depot, so we're spending like crazy. And truth is, maybe people just like Home Depot more, right? And so, but what turned the markets red today, which we're going to get into, is the UK news. We're also going to go over the SPY and what's going on with that. But also, I want to show you something that sometimes you can look at and see what is like smart money doing. That's the bond traders. What are they doing? What do they see going on, right? And I'm going to show you that because I always like to leave you with something maybe you hadn't seen before and I saw it somewhere else. So I say, let me show you guys this. But here's the news out of the UK. I mean, you think we got it bad over here? I mean, good Lord. 40-year high, 10.1%. The estimate was for 9.8%. It's up from 9.4 in June. So disastrous numbers. And it gets worse for them because the Bank of England expects inflation to top out at 13.3% in October. I mean, imagine that. That is just, I don't know how they calculate it, but that is just crazy. And that's why, and this is, to me, doesn't get enough news, but the Bank of England has implemented 6 consecutive rate hikes to try to get this under control, while projecting the UK will enter its longest recession since the global financial crisis in the fourth quarter of this year. And I believe they projected it for like 5 quarters or something. And so that is not good. Why is that not good? And why is it being ignored? I don't know. But because remember I showed you those big cap stocks we have here in America? They get over 50% of their income outside of America. And so, that's not a good thing for them and everybody around them. I don't know what, I was about to say, I don't know how, before I read this, I was like, how are they going to avoid a recession? As soon as I saw those inflation numbers and then the energy prices going all across Europe, I don't know. But, not good for companies, obviously, and especially if they go into that deep of a recession for that long a period of time. And so, we'll see. We'll see how the rest of Europe plays out on this. But, that's not good news, I can tell you that. And so I think the market kind of reacted to that. But more importantly, the market today was just total manipulation like it always does. It always runs down during the Fed meeting. And then the FOMC meetings at 2 p.m. And I'll show you what the chart did because it's just nuts. But I told the members this morning when I put out the news briefing, telling you it's going to go green, and it did, right? And then, of course, it sold back off, which I'll show you. But to have a little fun here, if you're in Bed Bath & Beyond, I always say, what is the goal of, anybody that manages a hedge fund is to move money from your account into their account. So, of course, what does the gentleman do right here? This just got released right after hours. That this gentleman who owns almost 10 million shares of Bed Bath & Beyond and a whole bunch of call options, he's going to dump his whole, Cohen? Yeah, his name is Cohen. He's going to dump his whole 10 million shares plus all the call options on the market, of course. And so basically it's just telling retail, traders, F you, boom, here we go, appreciate you running it up, and I'm going to go ahead and take this money and run. And the stock was down, upwards around 22% at one point in time. And by the way, if you get anything out of this, please hit that like and subscribe button for me. I really appreciate it. And to show you how crazy it is, I just looked at it a minute ago, and it's actually come back. It's only down 12% now, so people are still piling in. Even after seeing that right there, they're like, we'll buy your shares, no problem. But he bought those shares, I don't know what price, from January to March, and just tons of call options. And so I assume he made a killing. I don't know. I don't even have anything to do with the stock, so therefore I'm not going to waste my time even trying to research that stuff. But it doesn't surprise me. I don't know why people get surprised when they see, people like this do stuff like this. And the problem is, what I wish would happen is these guys need to be able to have to disclose their short positions. I almost guarantee you know as well as I do, that dude bought a ton of puts before this was put out in the news. He did. And I mean, there's no way around it. Or his friends did, or his family did. Somebody did. And so, that's the kind of stuff that bothers me, but that's why I'm just looking at you like, why are we even surprised, right? And, first I'll say this, for the FOMC minutes, let me just say, I told the members this morning, no matter what happens, the market will find a way to spin it to where it's like, oh, look, they're dovish or something, which absolutely not. Absolutely not. They were not dovish at all. And what they said was the main 4 points I took away from it, if I can remember this, is one, they expect a spike in unemployment. That's what they're waiting for. Two, they don't feel like the effects of what they've done has been seen yet. Three, they all agreed in the 75 basis point hike in July. And of course, the market's pricing in a 50 point basis hike coming up here in September. But, they believe that, we'll leave 75 on the table depending on the data, because they'll get another CPI reading before that. They didn't really talk about the balance sheet too much, but they did say they thought, I didn't see anything about cuts. What I saw was eventually they're going to pause. They don't know when that's going to be, but I didn't see anything about cuts. Because remember, what has the market been telling us for 45 days? Oh, we're pricing in cuts next year, early next year, mid next year, somewhere in there. They're going to start cutting rates, which means, of course, the reason why they're cutting rates, we're in a recession. That's why. But they're saying, no, we don't know about that. We're just going to try to get them to a certain point and hold. But the one thing they did say in there was some Fed presidents basically called Jerome Powell an idiot. They didn't really say that, but they were like, what are you talking about? We're at neutral. There's no way we can be at neutral with the inflation rate sitting at 8.5%. That's not even close, right? And so that was another mistake he made when he was talking out there. It wasn't the first one, which is why he sent all the Fed presidents out there to try to retract, the statements he made. But, of course, obviously looking at this, you can see on the S&P 500, did not make a gap down this morning and did not make it above the 200. Still a lot of resistance right there, a lot of bears fighting, trying to hold on, people buying puts, hedging, and that kind of stuff. And here's the minute chart. I can tell you without even looking at a clock, that right there is when the FOMC minutes were released at 2 o'clock. Why? Because you see this pop, right? It runs up. It actually goes into the positive for the day. And I remember looking at that, I was like just laughing. And then, of course, runs back off after the pump. And, you look at that, Russell 2000, I showed you yesterday, it's falling below its 200. Moving average now on the daily chart, it's sitting right there at that support. So we'll see what happens tomorrow. And that leads me into one thing I always like to bring you guys stuff to look at. And I saw this on another channel, and so I went through the charts. And, it's one of those things you always want to follow the big money, right? Where's the big money going? And they always say bond traders, I don't know if this is true or not because I'm not a bond trader, are smarter than stock traders. And so maybe that's true. I don't know. But, we tend to that's why everybody wants to look at the bond market so much. So I looked at this right here. And if you look, you got the HYG, which is high yield corporate, a bond ETF. And that's considered smart money. And then down the S&P 500, it's not dumb money, but, there's a lot of smart people investing in the S&P 500. But it is part of the bond market, right? And so if you look, there's these divergences happening, right? And so if you go back to June, what is the HYG doing? Well, they're getting out, right? They're selling, saying, get the heck out of here. What was the S&P 500 doing? It was going up. And then what happened? We had a huge dump, right? And then what happens? Boom, S&P 500 sells off more, but then what's HYG doing? They're saying, hey, get in the market, get in the market, get in the market. Well, what happens? The market runs up right after that, right? And then you have another divergence where all of a sudden after the market dumped again, they're getting back in saying, hey, get back in, it's going to run up. Well, of course, S&P 500 is going down as people are selling. And then what happens? You get this massive run-up, as you can see right there. And, here we are today, and what's happening again? Look at the top right-hand corner. Well, smart money, whatever you want to call them, they're saying, hey, might want to get out, right? They're getting out. They're selling. Well, what's the SPY doing? It's still going up right now. And so does this mean that there's going to be a dump in the market? Absolutely not. Because to break that, all I do is you see the HYG break that trend line and go up and then start buying into it, right? It happens. You get these divergences I showed you multiple times. Right now, though, they're getting out. And honestly, what I see happening here is one, because they don't believe that the Fed is actually going to start lowering rates at all, maybe, or they're starting to look back and say maybe they're going to keep raising much farther than we thought. Maybe they're going to hold them up much farther than we thought. And I think another reason is simple, though, is because of the greed that's happening right now. All this FOMO going into the market. I mean, here's a fear and greed index I like to follow. And this fear and greed index is at 86% out of 100. You look to the right there, and you can see it's like a straight up line. I mean, it has skyrocketed from 3 all the way to 86 in a very short amount of time, okay? And when it does that, and it gets that high, well, yes, we can stay in the greed. This is considered extreme greed right here. It can stay there for quite a while, or you can see a dump in the market. But this is what scares a lot of like savvy investors out when they feel this FOMO happening. They see this meme stock crap that's going on right now, and they just want to say, okay, let me just take my profits and get off the table and always come back in. And, again, there we are in extreme greed. And I believe the CNN fear index just went to greed as well, but it's not extreme greed, right? And we've seen this in crypto. You can stay in extreme greed from like 85 to 100 for a long period of time. It can happen, okay? And so, that's what everybody's kind of waiting to see, is that's what's going to happen. Because remember, one thing you don't have behind you right now in these moves is you don't have liquidity flying off the shelves from the government right now. There's not any stimulus checks I know of coming out. They may actually extend the student loan repayments again, which will keep, money in people's pockets. People can't buy homes, so they can't afford them. So those down payments are still probably going in the market as well. So you got that going on. But, we still have higher interest rates going up. And the biggest factor will be what I talked about the other day. Will the Fed actually, grab their cojones and actually do what needs to be done to get inflation down faster and start running off that balance sheet? I will always be in the camp of, I don't mind short-term pain for long-term gain, right? I don't want to drag this thing out to where we're sitting. The worst thing we can do is sit there because these morons don't know what they're doing because it's an election year and they don't want to ruffle feathers and all this other stuff, and have inflation sitting there above 5.5%, 6% for like a year or 2 years. That would be disastrous, okay? And I'd rather you run that market in the ground right now because we can buy at cheaper prices, right? And we can scoop up a lot of stock now, and then they can get inflation under control, and then boom, away we go. That's really what I want to see. But again, I'm not in charge of it. And some people, they don't like that. They're like, no, let's not do it. Let's wait till 2023 to try to run it in the ground or something. But that's just where I'm at. But again, we'll see what happens tomorrow. The rest of the week, we got monthly options expiring Friday. We'll see what the market makers want to do on that. But as of now, and I'll be watching that, HYG chart very carefully to see, are they coming back in? Are they buying back in? Because I know for a fact, hedge funds have started to rotate back in to tech and things like that, but it depends on what kind of tech you're talking about, really. And I feel like retail is flowing into the smaller tech stocks. You see Apple, which can't seem to be stopped. It was up 2% today when everything else was down. Right? I think it finally ended up negative on the day, but that stock is unstoppable. You're talking about a stock with a $2.75 trillion market cap, I believe is that right now, which is just amazing, But what's happening is these hedge funds, everybody's trying to hide out in these kind of stocks because they have all this cash on hand. They buy back shares like crazy, and they don't care about anything else. But also something you see happening right now, I'm noticing, is you see like healthcare and these kind of defensive sectors are starting to pick up steam right now, right? And usually you only buy those when you think there's something bad going to happen, right? Because they're defensive for a reason. And so that's what we got to see is going to happen. That's why it's a wait and see game for me, because the risk reward right now, is high, right? It was low in June when you started buying. It's low in July. Now all of a sudden we're getting up against all this resistance and everything. And so for me, if there's a chance, because hedge funds love to play games, that they're going to try to dump this thing. Let's say they want to dump the index as 3 to 5%. Well, that's going to send stocks down like 10 to 15%. And I can get a discount on stocks I want to buy right there just by being patient and waiting. Or let's say it busts through, we start testing, and I say, okay, cool, we can hold it. And we confirm, okay, maybe the bear market is over. Then I can buy. I don't mind waiting. I've become a very patient man, in my older age. So, that's what happens when you get older, you become more patient, I guess. So, my kids taught me that as well. So, yeah, that's where I'm at. That's what I'm doing. And, we'll see the bulls and bears, battle it out this week and all that good stuff. And the market makers have their fun with the market and do their thing and stuff and move money from our accounts into their accounts and that kind of stuff. And so, it'd be fun to see how it plays out. I'll have fun watching Meme Stock Mania Thursday and Friday and see if, because there is somebody out there who said they got, I think it's pretty high calls on Bed Bath & Beyond up there, and they got a lot of them. So, we'll see how far that whole thing goes, but that's where I'm at. Let me know what you're doing in the comments. Hopefully that helps. I'll have another good video showing you tomorrow probably why you see funds are actually moving into healthcare and these other sectors. I'll bring to your attention. You'll get to see it. And again, it'll be something you can move, you can use it going forward from here on out for the rest of eternity, because guess what? If I live to be the average age, I think it's 76 is the average lifespan, and we're going to go through bear markets every roughly 6 to 10 years, somewhere in that time frame or something. I got a few left in me, hopefully, So I'll be able to use that going forward, and so will you. So hope you guys have a good night, and I will see you later.